Well, hello, welcome. It's the last trading day of October. I guess it's safe to call it October because we've had a lot of green closes for the weeks. But this week is proving quite stubborn with 3 days of losses in the market. But let's hope we can get a green close today and tomorrow and cap the whole month up. But let's get a check on the oil market now. See, oil prices rose today with Brent crude futures again about 35 cents, up 0.5% to about $72.90 a barrel. We see WTI not left out there, up over 0.5% there. Price at $68.93 a barrel. We also see from last week, definitely was a big drop we had last week. But that's started on Monday with another drop, but we've seen a recovery right there for the oil market. Let's get a check on what's happening with the FX market now. See the Naira, that dropped marginally about 0.04%, 1,666 Naira for the NAFEX window, and that's down 0.33%. And definitely still all about liquidity, what's happening with liquidity, and definitely we'll see interventions from the Central Bank of Nigeria. All right, now, definitely for the commodities market update, we have Dumebi Moluwole. She's a senior analyst, financial derivatives company, and she's going to be talking to us about what's playing out with the Naira and what's happening with supply. Yeah, Naira supply at this point. Good to have you, Dumebi. So definitely a lot is playing out right now when you look at the FX market. Then we also see money supply. That's also rising. Then another thing. I'm wondering how much the consumers can take at this point. We're seeing another rise there for PMS, and this is coming from the NNPCL.
Yeah.
How much can we take?
So that's a couple of things to unpack. So, but just starting off with the exchange rate, we do know that we've been having supply issues. In the month of October, we first saw like a steady increase in market supply, at least at the official window, where the Naira was trading relatively, cheaper compared to September. But towards, I think, October 24th, we did see a significant dip in the average daily turnover, and that significantly crashed the FX rate prices. And then moving on from there, and we're also seeing like a widening gap between the parallel market rates. We're also seeing a widening gap between the parallel market rates and that's also, creating like a wide premium, a spread between the FX rates and significantly impacting market sentiments across board. So that's pretty much what's happening with the FX market. We're seeing a lot of supply and demand issues affecting the market. So from on the demand side as well, we're also seeing that festive season demand is also, propping up some level of concerns as well with the market. So those are like the issues with the Naira in terms of supply and demand. Now looking at commodity prices, we're seeing like, I know you mentioned the money supply growth, so that's a significant, factor that is currently, pushing up Nigeria's inflationary pressures. And we do think that until we see a significant decline in until we see a significant decline in money supply growth, we think that inflationary pressures will still be very pertinent across the economy. So, and one pointer to this is the fact that one pertinent factor to this issue is the fact that we have seen, the CBN definitely try to tighten market liquidity, interbank market liquidity to somewhat reduce money supply growth, because we do think that that's one of the factors that's currently nudging inflation in Nigeria. We're also seeing an increase in money supply from FAC.
Supply, at this point, we've seen tightening measures from the central bank, but I don't know why we're not seeing that impact. When we see the data.
Yeah, in terms of money supply.
Why is it not coming down?
So I would say it's a couple of factors. So we do know that, number one, there's an increase in cash circulation at the moment. When you look at what happened, I would say, I think it was toward the end of 2023, thereabout, or 2022, when we had both the old Naira notes and new Naira notes together in circulation. At that point, we did see like a huge jump in cash in circulation, and that definitely contributed to money supply. So that hasn't been mopped up from the economy completely yet. So that's one of the factors contributing to it. Then you also consider that FAC disbursements as well have been increasing, especially because, now when you convert the dollars to Naira, the FAC disbursements are higher. That as well is contributing to money supply growth in the country in Naira terms, obviously. And then you also look at the fact that we're seeing a lot of spending across board, and there's also like a huge chunk of liquidity within the interbank market as well, contributing to this money supply growth that is somewhat nudging inflation. But primarily, when we always talk about Nigeria's inflation, we always tend to go back to the structural issues, simply because money supply is just one of the many factors. And when you even dissect Nigeria's inflation, you would realize that the impact, the coefficient of money supply that's impacting inflation is pretty slim when you consider other factors like insecurity, low agricultural sector productivity, low storage facilities, and the exchange rate as well. So money supply nudging inflation in Nigeria is pretty much just a lower tier, right? But then within the purview of the central banking system, right, it is something that they have to address, and that's why it's a pertinent issue. So much to unpack there, and definitely for the last meeting of 2024, we'll see what the CBN has in store. Thank you so much, Dumebi Oluwole. Always great having your perspective on Thank you for having me. Thank you.
All right, we'll take a quick break now. When we come back, we're going to be looking at the consumer goods sector. We'll drill down on what's playing out there. That's in a moment. Just stay with us. Welcome back. Well, let's look at Nigeria's consumer goods sector with a focus on flour mills. Nigeria, I see the company is undergoing strategic restructuring at this time. We've seen them, try to do a lot of initiatives, buybacks and all of that. But let's understand the broader context and implications of these decisions for the company and for the sector. Joining us for this conversation, we have Dr. Ayo Teriba as a CEO, Economic Associates. Join me right here in the studio. Great to have you, sir.
Thank you very much.
So, quite a number of initiatives this company is undergoing at this time. Talk to me about why they chose, this time. And looking at the sector, we see a lot of challenges, right there with operators. So, talk to me about these initiatives that the company is undergoing.
Right. Yeah, the tearing. You speak about the sector. But the tearing has been very, very active, whether you're looking at the country, macroeconomic dynamics as a whole, or the realities that players face in specific sectors. For example, in the agribusiness sector, where the Nigerian flour mills operate. You hear a lot of what the government is saying about food and the need, for Nigeria to have enough of agricultural produce. You hear a lot of statements about, rebates on import duty, specifically on food. Now, this is a company that operates, in the food and agribusiness sector, for who farm output, guaranteeing steady supply of farm output at stable prices is key, for the sustainability of their factory production activities and for their, downstream ability to engage, with their consumers. So why now? Why not now? No time,
I guess no time would be better than now.
If the idea is to strengthen your strategic grip on the levers of your own sector, or the levers of your own company, of your own value chain, I do think that now is a good time. It's a surprising time because it's a time when company after company come in to tell you that they are exiting, big name companies for that matter, both in the agribusiness value chain and elsewhere, in the economy. So for you to find one that says, I want to invest more, I want to repurchase my minority share holding, and I want to strengthen my propositions upstream to guarantee stability for my factory operations and serve my consumers better.
Talking about buying back, the minority shareholders, is that typically if a company does this, how does it help in the company's ability to attract investment?
Well, you have multiple sources of investment that a company can choose from, and the decision on which is the preferred option rests, with the company. In this case, they've chosen to go private. They want to raise $1 billion in additional investment to be injected over the next 5 years, I understand, and they choose to do so privately, and to make sure that the interest of the minority shareholders, do not suffer. So they are offering to buy back and at a premium, and so it's a choice, whether you want to increase. Some other companies are increasing their, issues in the market. They, in their own case, want to go private and raise the money,
And definitely, with an expansion plan, as big as this, do you see, any risk ahead, because at this point we're still dealing with currency fluctuations at this point, and we've seen how all of that has played into, most of the reports we're seeing, especially from the consumer goods sector, when it comes to, forex losses and all of that. Do you see any risk there?
Well, there are always risks ahead. Business is not about avoiding risks. Business is about taking risks. And while the decision I hear them announcing that they have made is to increase their investment upstream. I hear them saying that they've invested in higher yield seedlings, and they would like to have an increased take upstream to guarantee stable, and affordable supply. So I do think that much of the move is meant to minimize risks.
Talking about
to minimize their dependence. Yes.
I'm talking about minimizing risk and dependence on some sources. We know local materials sourcing is another issue. When it comes to companies like this, you don't want them importing raw materials at this point. So what do you think is the plan to actually boost local sourcing of raw materials?
If I understand it correctly, the investment to be injected, the bulk of it is meant to be deployed upstream, to strengthen, their propositions in farm inputs, seedlings and grains. And so if that is it, they are trying to reduce their dependence on third-party suppliers upstream. So I think that's much less risky than when, you just sit down in the factory and hope that some others will invest in higher yield seedling for you. Some others will ensure that the crops arrive when you need them. So I do think that they're trying to reduce, such risks, going forward.
All right, so looking at other African markets, what risk will you say Nigerian companies face in going into most of these other African markets? Because it would be nice to get some of these companies actually exporting to neighboring African countries and bring in some forex. But what risks are you seeing for that?
Well, perhaps we should frame this in terms of opportunities in other African countries. If it was going to be risky importing, then perhaps when you strengthen your propositions upstream, when you guarantee that you can have the crops, then you are speaking about opportunities, to seize, demand a sales opportunity, cross-border sales opportunity across. If the company we're discussing is not into export of produce, they're into export of, value-added, manufactured items, so their proposition for other African countries is to also serve them, some of their staples, in the, flour, in the spread and margarine, vegetable oil, and sugar value chain. So if the opportunities are there, and it's increasingly difficult for everybody to import, so why not export?
Okay, so
and that gives you income revenue diversification. It also gives you foreign exchange supply.
Yeah, we need that foreign exchange, definitely. But looking at all the moves the company is making at this time, what impact do you see it having on the sector and on employment?
Well, if exit is going to be negative on employment, and if it's going to impact, the sector negatively, then they are not exiting. They are doing repurchase of minority shareholding, and they're injecting $1 billion over the next 5 years. Injections are favorable for the country, it's favorable for the macroeconomy, and it's favorable for the sector. And of course, it should be favorable for their business. So this is what the President Tinubu regime encourages, that more companies would invest more in the country. So,
all right, and definitely we're hoping for...
It's unquestionable.
Yes, we're hoping for no more exits or less exits and more entry and expansion in most of these...
particularly in the segments.
In this segment,
that are
yes.
critical.
Yes, because consumers are going through a lot right now.
Manufacturing operations, yeah.
All right, I want to thank you so much, Dr. Ayo Teriba, CEO, Economic Associates, for helping us unpack, the moves by this company. Thank you.
Thank you very much.
All right, so discussions about tackling Japa in Nigeria with technology. We see that's ongoing at this time, but the pressing issue of brain drain in Nigeria is essential to understand its scale and implications across sectors. So this phenomenon has significant consequences for country's economy, innovation, and overall growth potential. Additionally, we'll discuss the role of technology in facilitating remote work. Join us for this conversation. We have Yen Choi. He's a co-founder Netcom Africa. Joining me right here in the studio. It's great to have you, Yen.
Hi, good morning.
Morning. Yeah. So yeah, we keep talking about people looking for better opportunities. When there's a cost of living crisis, and we see the macros are not looking so good. So like birds, migrate. We see people try to migrate to greener pastures. But talk to me about brain drain in Nigeria. In your opinion, what's it looking like? How bad is it really?
Well, it's pretty bad, especially with the youth. So, in our organization, a lot of our management have been with the company for 10, 15 years. But the youth, 1, 2 years, before you know it, they want to do their masters in the UK. So it's quite severe. So we're in the telecom industry. It's happening in healthcare. It's happening in tech industry, in many different industries it's happening in.
Right, and definitely that some would say it's a good thing. You have your people going out there, and maybe it could turn into diaspora remittances that could be converted. So that's some kind of opportunity, with that. But talk to me about how, because we still need talent, within the country. Talk to me about how technology can help retain talent, in the country. Well,
the first thing that comes to most people's mind is remote work. Right, so you're working for an organization that's abroad. You're making better money, usually in most cases. You need technology. You need a very good laptop. You need a very, very good internet connection, maybe even two. Right, you need a comfortable workplace, and you're there to go. But what most people don't talk about is what are you actually doing? Are you exporting yourself? Are you exporting your knowledge? And because of that, it's not just the technology that's needed. Like, what is the skill that you're exporting? And right now, a lot of the remote working jobs is some type of business process outsourcing, whether it's a call center or providing customer support or some type of outsourced software development. And these remote workers are acting individually, not as an organization. So there is a massive opportunity where a company in Nigeria would get into this business process outsourcing to provide those services and create jobs.
And I've heard from some people trying to get some of these remote jobs, and some have talked about challenges when it comes to certificates or certification. Some say they don't have maybe the certificate from that country, so it's looking like it's difficult for them to actually get some of these remote jobs out there. So talk to me about that. Do you really need to get an international degree to actually get some of these remote jobs, or you can just work with your Nigerian degree?
Well, I'm not advocating anybody to leave the country and helping them leave to...
No, yes. Get that remote job here,
yes.
Work here,
exactly.
And attract the foreign currency.
So that's why that intermediate company is necessary. As an individual, you need to demonstrate all your certificates. But if you're working for an organization within Nigeria that has that relationship abroad, that approval process only happens within the country. And that's where the opportunity is to understand the local situations of employment.
Right, because I've heard a lot of talk about that, and some people, like recently, I heard a lot of complaints about internet service. Some people, working remote here, they say it's really difficult. When you have to have multiple internet service providers, and we've heard talks about most of the telecom companies talking about raising tariffs, that they're not able to survive with these prices, at this point. So how serious should we be taking this internet issue? Because it's also impacting, some of these people that are trying to get these remote jobs.
Yes. I think that mainly affects the consumer mobile networks. Mobile data in Nigeria, 30 gigabytes of data is about $3 US. In America, it's more than 15 times that amount. Okay, so data is cheap here, but that's consumer data. And actually, there's a lot of pressure to mobile operators to raise their prices because they're buying all the same equipment in US dollars. So how can they be profitable? So I'm assuming they're going to be struggling a lot. But at the same time, a lot of companies in Nigeria are using very, very reliable, solid internet services, business-grade internet services, which are not shared. They're highly available, they have redundant connections, and they're capable of doing all that remote work, video conferencing, screen sharing, multi-team collaboration, and it does work. So that is available in the country today.
All right, talk to me about examples of countries that have been able to use technology to actually retain talent in their country.
Well, let's look at India, for example. India, the call center business process outsourcing industry is a major contributor to the GDP. And how did they do it? This is the industry that didn't exist 25 years ago, and now it's become this massive industry. First, they brought in diaspora who have experience in that industry to set up those businesses, to get those jobs and those contracts as an organization. One of the first BPO deals in India was the outsourcing of American Express call center. Massive, hundreds, thousands of people. And that just grew and grew and grew. So now what's happening is you're getting a large amount of Indian diaspora that want to go back to India and grow and participate in that industry where it's dynamic and they can grow and there's more opportunity instead of being stuck in a job that pays well but is boring.
So, definitely we've been hearing about, talks when it comes to the U.S. and China when it comes to technology. There's that battle, going on, right now. And, what we're trying to say is there's going to be that superpower, for technology. These countries are trying to, claim their own. But looking at countries like Nigeria, Africa, what should countries like Nigeria be doing, right now to be able to, play in this technology market, at some point? Because we keep importing most of our technology. Mm-hmm. It's time for us to produce this technology. What should we be doing right now?
The mere fact that people are leaving the country, where are they going? They're going to get involved with the high technology sectors, healthcare, across the world, which means the talent is here already. Okay? Now, why are they leaving? Because life is tough. 10 years ago, with 100,000 naira salary, you can buy 10 tanks of fuel. Today, you buy one if you're lucky. Salaries have not increased. So people are pushed out of desperation to leave. But if that lifestyle can be sustained, then they will stay. So I think that's one of the main drivers of that.
So, looking forward, do you see, Africa and countries like Nigeria, able to step up, when it comes to, exporting technology at some point, or at least just, producing most of it, in country?
Yes, so they're leaving, they have the skills, AI, microchips, software development, business process outsourcing. Any of these industries they're not exporting people, but they're exporting knowledge. That's the key. You don't need to build factories. You don't need to buy buildings. You just need to cultivate people. Upskill, train, export the skill, not the people.
Export the skill and not the people.
Not the people.
Well said. Thank you so much, Yen Choi, co-founder Netcom Africa. It was great having your perspective today.
Thank you very much. All right. Bye.
All right, as I said before, it's the last trading day of October. Definitely, I'm sure investors are bracing for what's to come. That's in November. Will it be a November to remember? We'll definitely find out. But that's it from me on Business Morning today. I'm Ladi Williams. I hand things over now to the Sunrise Daily team.